not nervous. I actually think it's a buy. But listen, the prices are prices. It was an ugly day in crypto yesterday.
Hey, Julia. Kathy Wood's ARK Invest swooping in to buy more of those high-growth tech names that were really beaten down in yesterday's sell-off. Robinhood was one of the biggest, ARK adding more than 400,000 shares of that trading app. This was across two different funds, the Innovation and FinTech Fund. Coinbase, meanwhile, was another. ARK bought a total 96,000 new shares of the crypto exchange. ARK also buying up more UiPath, Zoom, Roku, Blade, and PagerDuty.
I don't make big market calls. I'm as bullish as ever. I buy every dip. I buy every correction.
Yeah, it's going to be a buying opportunity, I think, Kelly, and I just don't think you need to jump in there immediately, right?
I think that when you get these pullbacks in some of the top performers, there are great opportunities to buy in, and that, trillions of dollars on the sidelines that are in money markets and fixed income products that yield zero just aren't benefiting right now. So I think it's actually a great time to buy some stocks.
Today's pullback could be a great entry point into the market. Let's bring in Tony Dwyer, Chief Market Strategist at Canaccord Genuity. Tony, great to have you with us.
Are you a buyer on the dips right now?
So days like today are days when we're very happy we have a cash position. We can pick away at those companies that we've been doing diligence on. And when we get opportunities where they sell off $3, $4, those are opportunities. We do think risk assets are the place to be longer term.
It's really hard. The conviction level in markets is low today, and so you get a piece of news like this, you have to factor it in. And that being said, will we buy some stuff today? Yeah, I think you can add a little bit of paper if on this market pressure.
We're at a moment where everyone's only seeing sort of darkness and downside, and usually that's when you want to be adding risk.
The guy's an actor. He's reading a script. When they tell you not to panic, that's when you run.
All right. Today is Tuesday, September 21st. This is a recap for the stock market activities today. Folks, I got a good one for you tonight, and I don't say that lightly. Of course, the market opened up higher, as we expected, by the way. A rebound, oversold, buy the dip, cover your shorts, squeeze your nuts, etc., etc. But the pump faded right away, specifically at the end of the day, and the reason is we're not going to have clarity whether the market is going to go up or down until and unless we hear from the big dog, Papa Jerome Powell, who's going to speak, by the way, tomorrow. And then we're going to have clarity. Why? Because the market has been a cocaine addict. And in tomorrow's conference, insider trader Jerome Powell will give us more clarity regarding the future of the cocaine operation. Now, are we expecting tapering tomorrow? Of course not, because Powell said, I'm going to give you an advance warning before I taper. So the assumption is, if we're going to taper, then Powell will announce the advance warning tomorrow. However, if he starts tapering tomorrow, this will be the biggest betrayal in the history of financial markets. Of course, the expectations for now, the consensus among market participants and market commentators alike, is that the Fed will not taper, and it will never taper. We'll talk. But remember the Evergrande crisis? Well, Wall Street says that our fears regarding the Evergrande crisis have faded away in the morning when the market was popping higher. Yesterday, we were shitting our pants. Today, we forgot about it. And this is according to Wall Street, by the way, the experts. And the experts say you gotta buy the dip. They've been pounding at the table over and over and over again. Buy the dip. Buy the dip. Great buying opportunity. Buy the dip, you sons of bitches. Buy it. We need you morons to hold the bag. Please. And it was so embarrassing in the morning that Oppenheimer said use the 10% dip to buy stocks. And again, where is the 10% dip? Uh-oh, did they just reveal something ahead of time? Keep that in mind. And of course, the experts blame the algos for the sell-off that we got in the market yesterday. But somehow they don't blame the algos when the algos pump the market impulsively higher without any rationale whatsoever. Green candles, impulsive, aggressive green candles after green candles after green candles. Remember the no red candles allowed? These were the algos. But Wall Street did not blame the algos for the pump higher, now they're blaming the algos for the dump. And of course, according to the survey on my Twitter page, when I asked you what's going to happen at the end of the day, pump or dump, the answers were split down the middle. And this is exactly the sentiment in the market today. No conviction at all in buying the dip and no conviction at all in selling the rip. Why? Because we're waiting and waiting and waiting for more clarity out of the Fed when Chairman Jerome Powell speaks tomorrow. And that leads me to In Focus tonight. What else? Whisper of a taper. Taper or no taper. Pump or dump. And this is really what it comes down to. We have explained in this channel over and over and over again that the market is becoming more sensitive toward the liquidity and not the fundamentals or the technicals, by the way. And therefore, tomorrow's conference is extremely important. It's even more important than the Evergrande crisis, taxes, Biden, economy, fundamentals, earnings, nothing matters. It's all about the Coke. And the fate of the Coke will be determined as soon as tomorrow. Let's review the facts here. Because Powell says, I will taper when two conditions are met. Number one, substantial further progress, whatever the hell that means, in inflation and substantial further progress in employment. If these two conditions are met, then I will taper. If not, then I'm not going to taper. Of course, it helps that he left the substantial further progress definition vague as fuck, so he can have room for flexibility to weasel around. I'm going to taper. No, I'm not going to taper, depending on how the stock market reacts. And therefore, I said on my Twitter page today that the market needs to drop another 2%, perhaps 3%, if not more, to scare Powell not to taper. But the drop we got so far will not scare Powell at all. And of course, at the end of the day, we know when will Powell taper. He will taper when Wall Street, the 1%, the ruling class in this country, grabs the phone, calls Powell and say, you know what? Wages are going higher. We have a labor shortage and it's time to taper now, Mr. Powell. We've already cashed in our profits, right, Powell? You did too. You and your buddy Kaplan and who knows who else, along with Barkin and Rosengren. It's a fiesta over at the Fed. Insider trading fiesta. We don't need the stock market to go higher anymore. We've already scooped up single-family homes. We scooped up land, farms all over the country. We're done here, Powell. Pull the rug. But let's entertain the substantial further progress when it comes to inflation and employment and see if these conditions were met or not, are met or not. Starting with inflation. The Fed says our inflation target is 2% average. But by the way, we're not using any formula to guide the 2% average. We're just going to eyeball inflation, which is a recipe for disaster, by the way. But regardless, if the goal is 2% average, well, the CPI, the last reading of the CPI was over 5% year over year. So this is way above 2%, the Fed's target. What about the PPI, the Producer Price Index? Well, the last reading was over 8% from a year ago, way above the 2% target, and the highest number on record, the highest PPI reading, the Producer Price Index, on record, okay? What about buying conditions, by the way? The worst buying conditions, this is according to the consumer, the worst buying conditions since 1980. And what about housing, Mr. Powell? Well, rents for single-family homes surged to the highest level since 2005. And housing prices to buy or to rent, but specifically rent because we don't have any supply to buy, because the Wall Streeters, the rich, the oligarchs, scooped up single-family homes across the country, stifling single families, actual single families, from buying homes. Now you have to rent from the oligarchs. They want to be landlords, but rent prices are surging higher. And now the American dream has been reduced from owning a home to renting a room in a house with 5 other roommates. And pretty soon, if the Fed continues to prop up the market with more Coke, the American dream will be reduced to finding a spot in the street corner. Perhaps government-provided capsules. Look at my crib, bro. I get 3 hours of sunshine. Our dear leaders, our government is providing us with capsules to live in. What a generous government. Our dear leaders, they care about us. They love us. Oh, and by the way, are you up on your shots? Because if you're not up on your vaccines, your capsule is not going to be unlocked with the chip in your brain. Right? The government implanted chip. They lock your capsule. You're homeless now until and unless you're up to date with your shots. And we're not talking about the good shots. We're talking about the vaccines, the 3rd booster, the 4th, the 5th, the millionth, and so on and so forth. And when Powell says that we're waiting for substantial further progress when it comes to inflation and for inflation to exceed our target of 2% and stay there for a while, well, inflation has been over 2% for a while, Mr. Powell. Matter of fact, housing prices, when it comes to rents, the inflation in rent prices is way above 2%. We're talking double digits in pretty much every single metro city in America. Rent prices went higher double digits, and they continue to go higher and higher and higher with no stop in sight. But luckily for us, even Papa Jerome says that his substantial further progress guidelines or threshold was already met. Pay attention now, was already met when it comes to inflation, but it has yet to be met when it comes to employment.
We have said that we would continue our asset purchases at the current pace until we see substantial further progress toward our maximum employment and price stability goals, measured since last December when we first articulated this guidance. My view is that the substantial further progress test has been met for inflation. There has also been clear progress toward maximum employment. At the FOMC's recent July meeting, I was of the view, as were most participants, that if the economy evolved broadly as anticipated, it could be appropriate to start reducing the pace of asset purchases this year. The intervening month has brought more progress in the form of a strong employment report for July, but also the further spread of the Delta variant. We will be carefully assessing incoming data and the evolving risks.
But this was back in the Jackson Hole meeting last month, and since then, we have done a lot of progress. Let's see how the numbers developed for Powell. When it comes to employment, for example, the weekly jobless claims are at a pandemic low. So is this substantial further progress or not, Mr. Powell? Furthermore, perhaps the most solid evidence that we have already achieved substantial further progress when it comes to employment, and what the cocaine operation is doing is pushing inflation higher, but it will not recover jobs at all. Matter of fact, there is no correlation at all between printing more coke to buy bonds and the creation of jobs. And this is evident by jobs openings. We have more jobs than unemployed people looking for work. We have excess supply of jobs, over 10 million jobs available right now. Meanwhile, we have over 8 million people unemployed. So perhaps one more month of printing, Mr. Powell, a little more coke, perhaps that's what's needed to convince people, the unemployed, to go ahead and fill some of those jobs. Really? Or are there other reasons behind the unemployed staying at home and not filling those jobs? Now, the only excuse that Mr. Powell will have tomorrow in delaying tapering and continuing the cocaine operation is this piece of data, the BLS non-farm payroll report that we got in the month of August, which came out way below expectations. Matter of fact, the expectations were for 720,000 jobs, and we got 235,000 jobs. And Powell will use this piece of data as an excuse not to taper. We all know that the number is cooked. This is a fugazi number, a fake number, but we have a lot of evidence to prove that. For example, the ADP jobs report for the private payroll, by the way, created over 300,000 jobs in the same month. So are we to believe that the private sector of the economy created more jobs than the private and public sectors combined? But this is the magic and the ridiculousness of the cooking. It's embarrassing. At this point, I trust the CCP numbers, the Chinese Communist Party numbers, not the BLS US government numbers. They should drop the L and just call it BS, the BS jobs report. Now, Powell might also use Delta as an excuse not to taper. So let's review the facts. According to the CDC, cases of Delta are peaking. We have already topped when it comes to cases. When it comes to vaccinations, we've made significant progress here. Matter of fact, over 75% of the country, almost 80% of the country over the age of 18 have already taken at least one dose of the vaccine. And remember what Kashkari says, the Minneapolis Fed president. Demon Neil Kashkari. He said that once we reach the 70% threshold in vaccination, then we'll taper. Well, Mr. Kashkari, we are beyond the 70% threshold that you have identified to start tapering. Are you going to taper? Do you have the balls to taper? Anyhow, we will revisit the subject at the end of the video when we discuss the economic calendar. But for now, we're moving on to cover the market's performance today. And here we go. The Dow Industrial Average closing in the red, down by 47.93 points, or a decline of 0.14%. The Nasdaq closing in the green by 32.49 points, or a gain of 0.22%. The S&P 500 closing in the red, down 3.57 points, or a decline of 0.08%. What about the relative sector's performance today? Leading the pack at number 1 and capturing the gold medal, energy, and a number 2 for the silver, technology, and number 3 for the bronze, healthcare. The laggards of the day led by industrials, utilities, and defensives, even though the majority of sectors of the market managed to close in the green. What about the advance to decline ratios? The NYSE, 61% advancing versus 37% declining. What about the Nasdaq? 62% advancing versus 34% declining. Not great, not terrible either, but not a convincing action that this is a legitimate rebound and we will build on gains from this point on. We have not seen the end of the pain yet. Moving on to futures. What's going on here? Rebound day for the most part. The dollar was muted today, and as we've seen in the equities market, the commodities market also rebounding higher, but holding the gains unlike the stock market. We have modest gains for crude oil prices, almost 1% gains for the WTI and Brent. And then we have natural gas declining. Lots of profit taking here, but the short squeeze, the pump higher will continue. How will natural gas prices respond to tapering? This will be interesting because tapering might drop natural gas prices even lower, but the fundamentals remain intact. We don't have fracking anymore. There is a natural shortage of natural gas, and therefore prices are projected to rise higher. What about softs? Gains across the board led by OJ, lumber, cotton, sugar, cocoa, coffee, all closing in the green, a decent day for softs. What about metals? Not a bad day either here. We have a rebound in gold, silver, platinum. Platinum was up big. Remember the coin. They're going to print a $1 trillion platinum coin to pay for our bills. Spoiler alert, the platinum coin will be also printed out of thin air. It will be added to the public debt, using more debt, new debt, to buy old debt. Does that sound right? Absent from the rebound today in metals futures, Dr. Copper closing in the flat line. I was anticipating a bounce in copper prices. That did not happen, and that leads me to Freeport-McMoRan and the prices of copper in general, by the way. I am a copper bull, and I have been advocating for the prices of copper to go higher and higher and higher. Since last year, I've been advocating for Freeport-McMoRan as a value play, and as copper prices rise, so will the stock price of Freeport-McMoRan. And back then, the stock was trading around $10 a piece. Now it is trading at around 30, and it was trading as high as 40 bucks a piece. Now, part of the thesis was the Chinese demand for copper. What do we have right now? The Chinese demand not looking so hot so. We have a lot of problems in China here. Due to Delta, of course, they're not going to release the actual information regarding cases and fatalities and what's going on with the virus in China. But rumor has it, it's pretty bad. And therefore, the Chinese demand is slowing down. On top of that, we have the Evergrande crisis and perhaps a slowdown in the Chinese housing market. Now, understand that copper has a lot of tailwinds. For example, EVs, the proliferation of EVs, the infrastructure bill, infrastructure spending here in the United States, the natural shortage in copper. But when you shoot down the Chinese demand, the largest consumer of copper, you're going to have prices depressed, at least in the interim. So my call here is that perhaps the copper trade needs to rest for a little while. We will revisit copper once again, perhaps in November, December, depending on how the market will react, and the economy, by the way, will react regarding tapering and the tightening of monetary policy. What about meats? What's going on here? Flat day across the board for live cattle and feeder cattle futures. Some notable losses here for lean hogs futures. What about grains? All in all, pretty good, with the exception of wheat and corn futures. The leader in grains futures today was soybean meal, rising higher by about 2% for the day. Moving on to the big casino, the options market. What's going on here? The first thing my eyes are drawn to is the depressed volume today and the put to calls ratio. We're buying more puts, not calls. What does that say? We have a change in sentiment here. it is shifting from hyper bullish into not so bullish, and perhaps at some point into bearish, and at some point hyper bearish, and that will be the bottom. But for now, the depressed volume is an indicator that we still have more pain to come, because this market has been moving higher, not for the most part, but largely due to the action in the options market, the participation from retail traders and investors buying calls. What happens when call options buying dries and perhaps shifts from call options buying to put options buying? This is a warning signal that we have more pain to come in the market. But regardless, here is the hottest table in the casino today, per usual, Apple, with about 825,000 contracts. About 59% of those were calls. And here it is at number 2, Lucid, LCID, with about 600,000 contracts. About 78% of those were calls. And pay attention here, I'm calling the top in Lucid, at least for this run. We called the bottom accurately, now I'm calling the top. Why? All of a sudden, options traders are interested in buying Lucid like crazy. The majority of the move has been already done. The majority of the gains have been already created. Now we have the Johnny-come-lately jumping on the action, buying calls, hoping that Lucid will blast higher and higher and higher, because nothing else is working in the market, by the way, with very few exceptions, including Lucid. You look at the IV rank, over 100%. This is yet another indicator that the top is near in Lucid. And here we go at number 3, Uber, with about 500,000 contracts. About 64% of those were calls. Uber's riding higher today because the CEO came out in the morning and updated the forecast for the company. I am skeptical about the forecast. I have to see it to believe it in the next earnings report, because from my observation right now, yes, I know Uber Eats is working, but what about the other business, the ride-sharing business? The rates are out of whack. What used to cost you $16, $17 is now costing you $40 plus. The rides are expensive. Now, if the sheepies are riding anyways and they're paying anyways, then this is very good for Uber. But if the consumer is boycotting or not riding as frequently as they used to do because of higher rates, then this will not be good for Uber. There is a threshold, by the way, when riders are not going to ride anymore because it's too expensive. We'll see. What about the unusual trades that took place in the options market today? Starting with the ticker EEM, emerging markets. They're buying puts here, betting for more pain to come, specifically in Asian markets, because the EEM is overweight in Chinese stocks. In this case, they're buying the 47.5 puts with the expiration date of October 15th, with the expectations that the name will drop by more than 6% by then. They paid about 45 cents apiece to enter this trade. All in all, spending about $3 million. What about the trade for the ticker FCX, Freeport McMoran? They're buying calls here, the 33 calls, the expiration date of December 17th, with the expectations that the name will rise higher by more than 8% or so. They paid about $2 apiece to enter this trade. All in all, spending about $4.5 million. Now, why would you buy calls right now for December when most likely we're about to see more pain to come in this name? So my interpretation of this trade is somebody who owns the stock and they're selling upside calls. They're not expecting FCX to go all the way to 33 by December. Now, on the other hand, the stock is oversold. It has been getting hammered day after day, week after week, and the assumption is at some point the stock has to rebound higher. But I'm not going to look for relief here, specifically if Powell is going to taper tomorrow. With one exception, by the way, if we have buy the rumor, sell the news in the dollar, then commodities would rise higher. But understand that tapering is tightening, and tightening means controlling inflation, and these commodities will drop down if inflation goes down. Inflation expectations, that is. What about the ticker LCID, Lucid Motors? We have a lot of trades here because all of a sudden traders discovered Lucid and they're betting both up and down. My assumption is the stock is near a top and we will see downside for the name in the days, perhaps weeks to come. So I'm reading the put options trade, but you can read whatever trade that you see in the screen here. We have a lot of them. Most of them are calls, with exception to the put trade that I'm about to read for you right now. They're buying the 25 puts, the expiration date of September 24th, meaning this upcoming Friday, with expectations that the name will pull down by more than 5.5% by then. They paid about 55 cents apiece to enter this trade. All in all, spending about $1 million. What about the trade for the ticker CRVS? This is for cornflakes, pharmaceuticals, whatever. The name was up big today, and they're betting for more gains to come by buying the $10 calls with the expiration date of October 15th, with the expectations that the name will rise higher by more than 16.5% by then. They paid about $1.10 a piece to enter this trade. All in all, spending about $1.3 million. What about the trade for the ticker AMC, the ape community? Not doing so hot so as of late, but they're betting for a rebound here by Friday, September 24th. By buying the 41 calls with expectations that AMC will rise higher by more than 6% by then. They paid about $1 a piece to enter this trade. All in all, spending about $1 million. Continuing with interesting trades. What about the trade for the ticker BBY? We have two trades here. This is Best Buy. It's a call spread. They're buying the 115, they're selling the 125 with the expiration date of December 17th, with the expectations that Best Buy will rocket higher, but not more than 17% by the expiration date of December 17th. They paid about $3.50 a piece for the 115 calls, and they received in premium $1.25 for the 125 calls that they sold. All in all, the entry cost for this trade comes down to about $2.25 a piece, bringing the total to about $1.8 million. Lastly, what about the trade for the ticker XLI? This is for the industrial ETF. This one is an interesting one, by the way. They're buying puts, big ones. The 93 puts with the expiration date of November 19th, with expectations that the XLI will drop by more than 5.5% by then. And they paid about $2 a piece to enter this trade. All in all, spending about $1 million. Now, this could be a proxy bet that the dollar will spike up higher, because if the dollar spikes up higher, this is not good for the giant industrial names, specifically those with overseas operations, which is pretty much the majority of the industrial sector of the market. International businesses, when the dollar rises higher, not so good for international businesses, including industrials. Moving on to the heat map analysis. What's going on here? It's all over the place. Some winners, some losers, but all in all, the picture is green. I'm not impressed, however, and the reason is when you look at the offensive sectors of the market, chips, energy, Chevron, Exxon, industrials, materials, all underperforming today. Of course, certain names are bucking the trend. We talked about Uber rising higher. We have other names like Airbnb, Snapchat, Toyota, the ticker TM, Twitter, certain banks, USB, US Bank, a name that I own in my portfolio, also rising higher. The biotech sector of the market did pretty good. We have another ticker, CGEN, which is another name that I own in my portfolio, also rising higher. We have significant losers here. The ticker CARR, this is for Carrier. We're talking about the crisis over at Evergrande in China. The demand for ACs is dropping down. We have GE dropping down big, over 3% today, along with Disney dropping down, the biggest loser in the Dow due to the streaming outlook. And by the way, in reviewing the unusual activities in the options market last night, I noticed the put options trade for Disney, but I decided not to present it because I had enough trades. But somebody knew about the news ahead of time and they bought puts. Not a lot, not to raise suspicion, but they made a lot of profits from the drop in the share price of Disney today. If this is a legitimate bottom and we have dip buying, then you need to see the offensive sectors of the market leading the market higher. Chips, oil, industrials, materials, perhaps financials, the reopening names, airlines, hotels, casinos, cruises, retail, restaurants. These are the names that should be leading the market higher if we have a legitimate bottom and we're out of the woods. But we're not out of the woods yet. Keyword yet. Moving on to charts, starting with the 30 minutes chart of the SPY. What's going on here? Popping higher as expected, by the way. This is the most announced unexpected bounce in the history of the stock market. But where did the chart stop, by the way? The answer is 438. Now, you think this is a coincidence, or perhaps, or should have, could have, would have? Not at all. The algos and traders alike are looking at the same chart you and I are looking at. They're looking at 438. Once the pop happened, that's good enough. Taking profits off the table right away, and we'll wait and see what happens in the aftermath of the FOMC conference by Chairman Powell. The chart yo-yoed back and forth between the support and the resistance of 434 and 438, but it became evident throughout the day that the chart doesn't have what it takes to rise all the way and give it another shot at cracking 438. So the natural conclusion became, we will see a flush down, perhaps not today, but if the chart doesn't have what it takes to break above 438, then 434 is not solid support at all. We have to look down at 430 for support. The likelihood is, if Powell comes out with a hawkish stance, perhaps not tapering right now, but announcing the tapering agenda, then the market will flush down and 430 would not be good enough. Perhaps we will see lower lows. And for that, we're moving on to the daily chart for the continuous contract on the SPY. Whoops. Uh-oh. This is not a good looking chart at all. This is a bad closing, a bad candle. There isn't a technical analyst on the planet. If you show them this chart, will tell you, yeah, buy it. This is good enough. Buy the dip, bro. Like the experts. The Wall Streeters, who are trying to deceive you, by the way, are saying, yeah, buy the dip. Maybe the market will rebound higher tomorrow on the news of perhaps Powell not tapering. But the technicals alone, this is not a buy it chart. This is a sell it, short it kind of chart. The momentum indicators are weak, negative divergences. The volume is rising higher on down days, and we have to look down for 4,232 for support. What about the Qs? 30 minutes chart. What's going on here in the NASDAQ? Once again, yo-yoing back and forth between the support and the resistance. The pop happened in the morning, the gap higher, stopping at the resistance of 369, and then going back and forth, perhaps in a wedge pattern. We will see a break of that wedge sooner or later. Will it be up? Will it be down? Well, if you're buying call and put options in the middle of the battle, in the middle of the wedge without the conclusion already here, your head is going to explode. 1 minute you're up, the next minute you're down. The assumption here is that the weakness will continue, and the Qs will look down for perhaps 363, 360 and a half, 360 for support. We will see what happens tomorrow, but this is not a convincing bounce at all. And when we zoom in to a 5 minutes chart, you can see that the chart respected the edges of the wedge, back and forth like a ping pong. If you have to lay a bet right now, which way, which direction would you bet on, up or down for the break? The answer is, most likely, it will be to the downside. What about the daily chart for the continuous contract on the NASDAQ? Ooh, this is not looking good at all. Not a good looking chart. The closing was bad. The likelihood is 15,000 will not hold, and we will see a flush down. And if the NASDAQ flushes down, it will be painful. Because we have, yes, some soft support around 14,500, but the likelihood is if we have a massive correction here, the Qs will go down to 14,000. That's a massive correction right there. Not a good looking chart at all. Be careful. You better hope and pray that Papa Jerome will save the day. The momentum indicators not looking good at all. The red columns on the histogram of the MACD are getting longer and longer and longer. We have more pain to come on the RSI before we can call it oversold. Moving on to the IWM 30 minutes chart. What's going on here? Gapping higher above 218, but falling back below and going back and forth, performing a lot better than the Qs and the SPY, by the way. But at the end of the day, we have seen a flush down across all markets. S&P 500, the NASDAQ, the Dow, including the Russell 2000. And now we have the IWM closing below 218. Now the likelihood is, if the IWM fails again tomorrow to trade above 218, we have to look down for 212 for support. Moving on to the most important chart to watch, the Dixie, the US dollar. What's going on here? Look at the chart and be honest with me. Does it look like the Dixie is about to pop higher or about to drop down? The answer is it's about to pop higher. The candlestick patterns to trading above 93 to the double bottom to the momentum indicators, the MACD, the RSI, all what the Dixie needs right now is an announcement from Powell that tapering will happen and the Dixie will shoot up higher. The only risk here is if we have buy the rumor, sell the news phenomenon, meaning the dollar been trading higher in anticipation of tapering, and when tapering happens, the dollar drops. I doubt that will happen, but if it does, we will deal with it. What about gold? What's going on here? Rising a little higher. Now, gold has three enemies: the dollar, yields, and BTC, Bitcoin, cryptos. Well, Bitcoin is getting shot as we speak right now. It's a massacre, a battle going on right now. Yields, if Powell tapers, the assumption is yields will pop higher and the dollar will pop higher. So for the gold bugs, if you're holding gold right now, heading into the FOMC meeting, I have nothing but admiration and respect for you because those balls are huge. The Nicki Minaj kind of balls. Moving on to yields, what's going on here? Zigzagging back and forth, waiting for the resolution from Papa Jerome tomorrow. Nothing to see here at all. Likewise, TLT, weekly chart, nothing to see at all. Trading higher, above 149, looking good so far, but the outcome of the FOMC meeting and the conference to follow will change everything here. There is a massive move coming in the bond market one way or the other. The VIX, perhaps the second most important chart in the market right after the Dixie. Why? Because when it comes to yields and the TLT, there's nothing we can do. We cannot control or read the chart of bonds. We have to wait for the outcome of the FOMC meeting. But when it comes to the VIX, we can do something about it here. We have the 4 hours chart. The MACD is popping higher. The assumption is that the MACD on the VIX already topped. What does that mean? The VIX goes down, SPY pops higher. But understand that the action we've been seeing so far is an indicator of strength, perhaps extreme strength here in the VIX, not giving up 20, still trading above 20, and the MACD indicator can still go higher. Now, in typical charting behavior, by the way, when the MACD pops and refuses to go down, and then we see another pop, the likelihood is the next pop will be enormous. If that is the scenario we're looking at, and the VIX will pop higher, we will see extreme pain in the market. The SPY will flush down significantly. What about Apple? Daily chart. What's going on here? My target is 14% to 15% correction from the top, and it looks like Apple is on track to go down to the 15% target. Now, we're going to have rebounds along the way. And the best case scenario for the bulls is to have the flush down right away. Give it to me, one shot, let's get it over with. One big down day to the target, 15% from the top, and then Apple will be oversold. We're going to see a bounce, and then perhaps the outcome of tapering will be behind us. We will comb through the rubble here to find out dips to buy, to find out good stocks to buy. We're not there yet. Keyword, yet. What about Tesla, the souffle? Bucking the trend, in my opinion, because Tesla did not flush down at the end of the day, and so far the candlestick formation is bullish. This is a bull flag formation. The chart traded between the support of 720 and the resistance of 742, as I've identified for you long time ago. Looking at the candlesticks alone, this is a bull flag, and the likelihood is, the outcome is, Tesla will pop higher. So who do you trust here? Do you trust Apple, the weakness in the NASDAQ, in the SPY, the imminent pop in the Dixie perhaps, or do you trust Tesla, one of the largest names in the NASDAQ and the SPY that is doing good so far? Here's how I see it. Tesla is not a majority-owned stock by institutionals or insiders. It's pretty much cut between insiders, institutionals, but a massive chunk of retail investors. Now, retail traders and investors who already have Tesla in their portfolio, they are Tesla believers. They are Elon faithfuls. And they're not going to sell the stock until and unless there is a lot of pain in the market. Everything else is selling down. And perhaps they're getting margin call. Then they're going to have to liquidate their Tesla, whether they like it or not. Therefore, I continue to say that Tesla will be one of the last names to drop at the end of this bubble. What about BTC, tulips? What's going on here? We have a battle going on right now, as I speak, by the way, the battle of 42,000. The tulip community is fighting for dear life to keep 40,000 because they know that this is a psychological level that you have to keep, must keep level, 40,000. For me, it's 42,000, but I'll be conservative here and say 40,000. In typical charting behavior, we discussed this with the VIX, by the way, a few days ago, specifically last week. Last Friday, when you have a level of resistance and the chart breaks above that level, it peaks its head slightly above and then it goes down looking for energy. Any buyers? The grass is greener above. Anybody want to join here? Anybody wants to hop in the ride? If not, the chart continues to go down and down to support levels, looking and looking and looking for support. Once it finds support, the chart rebounds higher and it pops above the resistance level once and for all, breaking the resistance. When it comes to support, it's similar. The chart drops below the support, breaking the support, it peaks below, then it rebounds higher, and it looks for buyers. Somebody to save the chart. any buyer, it's not looking good below. If we go down, you're going to start to lose money. Any buyers? If there are no buyers, then the chart curls down again and it breaks the support violently. In this case, it is 42,000. So we're going to watch how this one will end. But it is a sentiment for the Asian investor. All eyes on the Asian market right now. What will retail investors and traders do regarding the Evergrande crisis? If we see liquidation, dumping BTC, dumping cryptos, dumping equities, where our Asian investors are going to move to? The answer is U.S. bonds and the U.S. dollar. Watch out here. What about AMC or apes? I issued a tweet today saying that the apes are toast. They're done. It's over. I'm calling it. Why? Because the appeal for AMC has been always, yes, it is overvalued. Yes, the fundamentals don't make sense at all. This is a mania. It will end up badly, etc., etc., etc. But AMC, GME, and other meme stocks, but specifically AMC and GME, have been bucking the trend. When the market goes down, these stocks shoot up higher. That trend, that inverse correlation has been broken once and for all, and this is a bad sign. The whole appeal for AMC was, when the market goes down, I'm going to hide in AMC. Well, that's not going to happen anymore because the market is going down. AMC is going down. Cryptos are going down. This is the trifecta of pain, and that tells you that this one is serious, and this is the correction we've been waiting for. We haven't seen the end of this correction. Moving on to the conclusion of this video. What do we have on the economic calendar? Tomorrow, we have existing home sales, and this will be important. Why? The sentiment regarding the housing market. If existing home sales increase, then we have more holders dumping their houses. What does that mean? It means that these people, the sentiment in the housing market is saying the market has already topped, or we're not going to see higher prices from this point on. So we have to dump right now, and once they start dumping, prices will go down and the bubble pops. On top of that, if Powell tapers and interest rates rise higher, oh boy, we're going to see a lot of pain here in the housing market. Speaking of Powell, the big dog is going to be speaking tomorrow. All eyes, all ears, all tinfoil hats, everything will be pinned to Jerome Powell, what he will say regarding tapering. I outlaid the case for you. Substantial further progress has been made in inflation, and Powell admits that. And in my opinion, substantial further progress has been already met in employment. Will he taper or will he not taper? We'll see. But here's the last thought I want to leave you with. This is a chart of the 12-month forward PE ratios in the market. And for now, we have the most expensive, the most overvalued market in history looking at the forward PE ratios. But the Wall Streeters and the likes, the experts, continue to say buy the dip. This is a great entry point. Yep, the most expensive market in history is a great entry point. Think about that. And with that, ladies and gentlemen, I'm done here. This is all I got for you for now, but I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.